taxed. I've had a few clients who come to us saying, I've bought certain crypto assets, I've made no disposals, but I want to declare this to SARS and know what the tax implications are. And there seems to be that misconception, if I could say, as to when is your crypto asset taxed or which instances give rise to that tax liability. Good afternoon, everybody. Thank you so much for joining us. I'm joined here today by Mr. Ernst Jordaan, who is a tax specialist from IoT.nxt. Thank you so much for joining us.
Thanks for having me.
Today, Ernest is joining us to shed some insight with regards to crypto assets and the tax treatment thereof. I think a good starting point would be, what is a crypto asset? There's this misconception as to what it might be. Some know, some don't. If you could just tell us what it is.
Well, look, there is a misconception in the sense the definition isn't very clear, perhaps locally and globally. We did have the definition of cryptocurrencies in the Act a few years ago, and that got changed to say crypto asset rather. It's the more palatable and wide-reaching one that the OECD and the FSCA and everyone follows, and SARS also agrees with that. But basically, digital sort of currency based on cryptography that can be transacted and can be applied, and effectively it can be on a SaaS side, it's really just seen as an intangible asset of sorts that can be moved around, right? So not currency. The word currency was maybe a bit seen differently by people, and we're not. If I think it's El Salvador that actually implemented it as a currency that they use. But so just more of a asset rather reference than a currency reference.
Okay, and with that in mind, then, what implication does its classification have with regards to its tax treatment? How does SARS view it? How does SARS tax it?
Yeah, so basically SARS has just said their general stance is it's effectively an intangible asset of sorts. It's something that again it can be traded and bartered with. So they like to apply your normal tax principles with that. So we can't be instead of selling a house for cash, just giving me your car if you have a Ferrari, right? So that is still a transaction that has taken place, and there is value attributable to that. So it's not like it's disappeared and it's off record. But yeah, SARS basically sees it as that, and in an intangible asset that can be taxed in the various ways that you can earn money from it. So we've got the crypto arbitrage that people are doing. You've got staking that people are doing, mining as well. They're getting rewards for mining. So those are just some of the few things. We just had the session now where it seems like there's a guide on its way, hopefully before 2027, where they will have a bit more clear indication of exactly the type of activity you're doing with a crypto asset, and then exactly also how it will be taxed. But in general, it is something that can really just be taxed under normal income tax principles. Yeah.
Okay. And in which instances is it then taxed? I've had a few clients who come to us saying, I've bought certain crypto assets, I've made no disposals, but I want to declare this to SARS and know what the tax implications are. And there seems to be that misconception, if I could say, as to when is your crypto asset taxed or which instances give rise to that tax liability.
Yeah, so I think there's various trigger events that can occur, right? A lot of people think staying within the crypto realm does not attract a trigger event or a tax event. So swapping from Bitcoin to Ethereum or Ethereum to USDT or whatever the case may be. And that's not the case. In each instance, you are able to peg the value of the crypto to a base currency, be it the dollar, be it the rand, or whatever it may be. And you can always track how these have been converted. So I think it is important to note that actually these transactions, when you're swapping them, they can be taxed. There is a value that was gained at a certain time then or lost. I would always recommend that people do declare their losses, because also it's the right thing to do. But when you do get gains as well, you can at least sell off them as well. And then that's just the normal holding of the crypto assets, right? And buying, selling here and there. There's sometimes capital intention and investing intention, which is for long term. Some people then choose to trade it. which SARS will then see as a business activity effectively. Let's call it your Forex traders. It's the same principle that applies here. So yeah, if the Forex traders are pretty straightforward as well, crypto guys as well. So there is many ways which the tax trigger events occur. But I think it's important that people do know that even when swapping between currencies, it is triggered. And probably last but not least is it doesn't just trigger tax when it hits your bank account. Even if it's on the platform that you're holding or trading with, you're already liable for tax at that stage, because our system works on the earlier of receipt or accrual. So it's important just to know that you have then actually earned something. It's just not sitting in your bank account.
Fair enough. And I think just in closing then, any sort of remarks or comments on how taxpayers could ensure that they're compliant going forward, that they're accurately or correctly disclosing these things when submitting returns, and just to ensure that they maintain a compliant status going forward?
Yeah, well, I think it's very important. Data, right? It's the evidence that you've got. It's the only thing you can use to prove. So it's important to keep track of what you are doing. I, for one, am a fan of the HODL approach, just taking a long-term view. Um, I just mentioned now the 5-year return is about 880%. So you're really looking at, if you just kept the crypto and never sold, you're pretty well off right now. So I do think just keeping track of all your transactions on a monthly basis, perhaps on a biannual basis, you could go look at it. But you do need to declare it, gains or losses, right? So do not just think, "Ooh, I've made a lot of money and I've got gains. I have to now declare. I'm very scared." I think a lot of people forgot that you can do losses as well. But again, that's not the point. The point is it's the right thing to do, because that's what the law requires us to do. So keeping record allows you to determine when you do have a loss and a gain, whether you are trading, whether you are going it for the long term, and it should be capital. And that just builds up all the evidence to show SARS exactly what you are doing. And again, it doesn't have to hit your bank account. So you're not going to necessarily always show them your bank account. It's on your platform provider that you are using, that you have to get this data from. And there's various software companies now that are offering these services to track your crypto transactions, which can also help for taxpayers to actually disclose this to SARS.
Perfect. I think that's crucial, especially in recent times where we've seen quite a few audit notices being issued with regards to historic crypto non-declarations, if I could say. But thank you so much for your time, and thank you for that input and that insight. We really appreciate it, and thank you very much.
Awesome. Thanks for having me.
Perfect. Thank you.